So there are companies in the market, where you're collecting dividend almost every month is coming in, right? I mean, so dividends are usually paid every quarter, every 3 months, and many companies' quarters end on different months. Some end in Jan, some Feb, some March, some April. So every month you can have dividend income basically if you divide your portfolio in such a way. Now, how exactly do dividends work, and how does it grow in your account overall, like in your portfolio? So just a very small example I'll take. Let's say this is just a complete example. Let's say stock MSL, my stock life. Okay, so my stock life has a stock is priced at $100 per share. Just an example. And then there's stock of ABC priced at maybe 500 bucks a share. Then there's a stock XYZ priced at maybe 250. I don't know, anything. And then they have their dividend ratio percentage or dividend percentage. Right now, these go from 1%, some are 2%, some are 3%, some are 4%, and there are dividend stocks in the market that pay up to 6-7% per year. Higher the dividend percentage, the higher the percentage, and the slower the stock price goes up. I mean, it goes up obviously, but it does not go up as fast. Lower dividend percentage, the stock price goes up much faster. Okay, so let's say, for example, this MSL stock is paying 3% per year. This stock is paying maybe 1 point, or I'll just keep round numbers 2, and this stock might be paying 4% per annual basis. Okay, and so now you have a portfolio. Now this session, guys, I'm doing live. This is not something that I prepared for because I believe in doing it live. It makes more sense to me, right? So let's say a portfolio size when you have dividend income, like $1,000 portfolio does not make sense. I mean, yes, you can put some money in it for the next 20-30 years and don't look at it, right? But you're not going to make enough money where you'll be happy off with. But let's say tomorrow you have $100,000 in your portfolio, which you want to allocate towards your dividend portfolios. Now, there's something called the secret to dividend income is compounding. Okay, it's compounding, which works. But the reason I'm going all these things over so you guys, your mind's fresh, so you guys can see these things will motivate you. It'll give you more confidence in the markets, how the money is actually made. Okay, right now, many of us, most of you guys trade options only. Even though the market's at all-time highs, but one red candle, your options go to zero. You think the market shit, you're losing money. But that's trading options. It is not investing. Know this. Trading options, you are not investing. You're basically trading. You're playing with your money. You're managing your money day-to-day basis. You're just trying to be on the right side by looking at the technicals, market conditions, and whatnot. You're trying to predict a short-term move. The shorter-term move, the chances of you predicting it right, they're very low. The longer the time frame, the more chances you will be right. Most investors that invest for more than 10-15 years, they're right more than 80-85% of the time. So if you have 10 stocks, your 8 stocks will be winners in 15 years, which easily overtake the 2 losers and plus leave you with tremendous growth and with a lot of money in your portfolio. Okay. So you have $100,000 in your portfolio. Guys, is my text too small or is fine? Just so you guys can see.
It's okay.
Okay. Okay, let's just make it bigger.
Yeah, it's fine.
All right. I'll increase the size anyways. So now let's say you divide this 100K. I'll put one more stock here. Stock ASD or something, I don't know. And the price for this is 50 bucks, and the yield on this is maybe 5.5%. Let's say, for example. Okay. Dividend. Now you have $100,000 and you're throwing in 25K into each of these stocks. From this 100,000, you put in 25K into each. Okay, your total portfolio is 100,000. So total is 100,000, and every 3 months you're gonna get this dividend. Now, as the price fluctuates, the dividend will also fluctuate accordingly. Okay. Now let's say this is year 1. This is year 1. Okay, so I'm just gonna go over different scenarios. So this is year 1. And on the first year, if you have 25K invested here in this stock, your 3% or dividend that you will get, let's say the price on average stays $100 for the year. Your 3% here is $3,000. Okay. Now, long term, you will have growth in the stock as well, right? So you will also, so this stock, let's say if it goes up by maybe 10 bucks or 15, I'll be very conservative. I'm not going to give you big numbers. I will give you low numbers, the realistic numbers, or that will average out throughout the years. Let's say the first stock maybe gives you an average return of 15% per year. If you're picky with your stocks over the year, you can get these returns, okay? 15%. So let's say the stock also goes 15% for the year. So this is year one. And now, so from 100 bucks, you put 25K in here. Okay, the 3% a yield, sorry, shit, I did the 3,000. So 25,000. So 25,000 times 0.03. My formula wrong. Yeah. Okay, so 750 bucks. Okay, so at 3%, you're getting $750 just as dividends from this stock, MSL, with a 3% yield. And now MSL also has growth of 15%. So you're 20, you're 25,000 times growth of 15%. Your stock value was 20. So you're putting 25K in here. Year one end, you got 28,750 bucks plus the 750. So the total, and this was your cash, 750 received in cash. This is the market value of your stock. Okay. So 750. So this equals some. Some of you guys already know these things. I know, but many of you guys don't. Your total return or total equity net worth is 29,500 bucks for MSL. Okay. And now it is up to you to this 750. Do you take out this cash, pay your taxes, or what you want to do? Or do you want to, for 750, buy more stock and reinvest this money? Let's say you reinvest the money back into MSL. Okay. So this was year one. Same thing here. So let's just see overall. I'm just going to take 15% growth for everything. And God. Okay, so this percentage here was the percentage here was 4, and here was 5.5, 1375. And the growth here, let's just say this was maybe 10%. This stock maybe went up 25% for the year. This maybe just goes 10% also. Okay. And the pool here is 1 point. Oh my God. Sorry, guys. Oh my God. I'll be making fun of me. Okay, 10% of 25,000. I'm just gonna manually do it. I think I'm pretty good at that. Oh my. So 25,500. 25% of 25K. 31,2,500, and then 10% of 25 is 27,500. All right, are you guys keeping up with this? I mean, this is like a boring lecture from a professor.
It makes sense, man. It makes sense.
If you guys want to make money, you gotta listen to all these things. Okay.
Yeah,
And
man.
so here our total is. Okay, perfect. It worked here. So now let's see the total that equals here. Our growth on 100K. So our portfolio increased, total was 16,625 bucks for year one. Okay. Now the growth here was total. What was the growth here? 16% growth year one. Now let's say if you were to reinvest this money, this now here, so for year one, our profits were on 100K investment. So year one. So let's just see how so let's see where we end up on year 5. Okay. We'll watch the magic here now. 116 minus the initial investment. So year one profits were 16,625. Okay. Year two, if I was to take this entire investment, okay, 116,625, like I don't do anything here. So 116,625 times, and let's say that we keep increasing by 16% every year, same dividend, like, you know, just an average. Okay. Our increase here, let's see what was the increase here. Sum equals this minus this. Now, year one are in, oh, hold on. Minus 100. Now, we didn't do much. In year one, our profits were 16,625. Year two, our profits increased by 18,600. Why? Because we now our 16% is not on 100,000, but on 116,625. Okay. Now, year three would be, and then we have year four, year five. And then in year three, we have 135K times 16% again. Right? If we were just to stick with 16, 156. And then, so I'm not, so this number you guys already know how to get it. So this minus 100,000 minus this. But no 100. I'm gonna keep it simple for you guys. Fine. 1.16 and this times 1.16. Now by year five, at the rate of 16%, our portfolio has already jumped over 100%. Okay. Make sense, guys? So with dividends, the only thing, all I'm trying to show you here is the longer you hold your dividend portfolio, when you start investing small, as the years go by, your profits are exponentially going to go up. Okay, so year one profits were 16,625, then they increased to 18,000, then they increased to 21,000, then they increased even more, and then so on. Okay, so here our profits were this minus this. And then here our profits were this minus this. And here our profits were this minus this. By year five, you're already making 30% average on your initial income. At 16%, which we started, right? We started at 16%, and now many of these companies will give you more than 16% per year. Check out these companies like Apple, Amazon, Microsoft, how much returns they're given in the last 7 years, or Google, or Netflix. Like these companies have given thousands and thousands of percent. I'm here going very conservative, like 16% only. This includes all the crashes, whatever you want to call it, the biggest dips, all the hurdles, tsunamis that come in the stock market. Okay, if you just sit on your portfolios when you have money like this, you can make so much more money. In short term, you can probably make more money in real estate by doing this in the year 1 or 2, but in the stock market, it grows exponentially. You leave this money in the stock market by year 10, year 12, you'll actually make more in this than real estate on its own. Okay, because here the growth is exponential. All right. And by year 10, your profits will even be more. By year 10, you'll probably make more money just in profits from where you started from, your initial income. Okay. Given you keep reinvesting your dividend income and everything back into the market. Does this make sense, guys?
Yes, sir.
Yes, sir.
Is valuable. You know, in uni, we usually find stuff like this useless or it's not as boring because it's not worth it. But here, you guys actually trying to put this to work and make money off it, right? So, so this was a little taste of how the dividend portfolios work. Personally, this is what I'm trying to grow now. You know, every time I make some profit, whether it's $500, $1,000, I just throw them into these different equities, which I don't even look at, right? Like I don't even look at them. So, so let's see where I end up in 5, 10 years on those. But it takes a lot of hard work, obviously, managing your numbers, managing your account. Another thing that you guys can do now. So with this, let me just.
Hey, Ricky, what are your top dividend stocks?
Personally, I would just look. I look at blue chip companies like Walmart, Home Depot. Apple's good, Microsoft's good, right? Then there's we have in Toronto somebody got from Canada, Enbridge, right? Banks are good. TD Bank, RBC, they pay really good dividends.
I have Enbridge in my account.
Right? RBC is good. And whatever other banks that you guys, Goldman Sachs, maybe, right? American banks. So any blue chip company, when I say blue chip means a strong companies which are not going to go anywhere that we know in 10 years. Walmart, I know for the next 10 years is gonna stay no matter what.
Just to give you guys a little secret cheat code for everyone that's listening right now, there's a company called FIE.TO. I own this one in my retirement account. It's the Canadian Financial Banks, and they pay us 6% dividend monthly.
Not annually 6%.
Yeah,
But divided
annually.
month, but 6% is,
Monthly payouts.
yeah, but this some these are also okay. So FIE.TO, LBC, their monthly payouts. So 6%. So you're getting 0.5% every month, basically. On every $100, you're making 50 cents just in your account, $6 every month. And if the stock goes up, that's bonus. Okay. Oh, now another thing, check this out, guys. Another thing that I did not go over. Tomorrow, if MSL stock goes at $300, this example, so MSL stock is $300, for example. The 3%, sorry, these are not dollar cents. These are this is not currency. These are numbers or percentages. So MSL goes to $300. Guess what happens to your dividend? Your dividend, 3% of $300 is $9. Right? So your dividend also goes up. So your growth goes even much higher. All right. And if this stock goes to, let's say, from 50 to 60, maybe. Okay, so the dividend, the percentage remains the same, but the stock price goes up. So ABC, let's say after 5 years or after 10 years, ABC goes to $2,000, which is very possible in the market, right? Your 2% on $2,000 is $40. Okay, so here your dividend first was 2% on $500, $10 on 2,000 is $40. So your dividends also go up as the stock price goes up. If the percentage remains the same, but the number goes up, right? So Warren Buffett, I mean, from Coca-Cola, KO, right? Like he's making billions and billions just off dividends.
Click on this real quick. Click on EPD.
EPD.
This stock.
So EPD, I'll go on the weekly as I'll be saying.
Zone out a little bit. There's a huge range on this one. Yeah. Okay.
So EPD.
Look at this range.
Yeah.
And then
So
this one pays
enterprise products.
7% dividend, I believe. 7%. And if you're bullish oil, this is a good one.
Okay, so if you're bullish on oil, this pays a lot of dividends. So let's say for 20 years, with 1999, guys,
8%.
so 8% dividend. So let's say in 1999, just for an example, you bought in this company, you bought 1,000 shares at maybe right here at $5, and these stocks went up to $40. Okay, so your increase in equity was one thing, but then all these dividends that you got paid on the raise, that's another thing. At one point, the dividends were equaling more than your initial payment, which you put in. Right, but stocks like this, you gotta stay in for a long time. Same with Coke. So stocks like this, you cannot look at the growth, what's happening. You cannot look at the share price. You just buy and just leave it. You don't do nothing with it because when they run, they run. Now this stock right now, just mark my words. After 10 years, you guys will think, okay, Ricky told us this 10 years ago. Coke was trading at $1 about 40 years ago. Okay, 40 years ago when Coke was trading at $1, Warren Buffett, most of his fortune came from this stock alone. Please put that down. Right, and this stock goes sideways, and then it ripped huge, and then for many years it stayed sideways. He did not care because he was getting his dividend payments from this stock. He just stayed in, he kept reinvesting. Okay, and now same thing's happening in Coke. This stock right here, in the next 10 years, by 2030, the stock will probably be at $150 or $200, and it's going to happen. And when they're going to run this stock, they might run it this year, they might run next year or the year after. As the inflation goes up, as Coke prices goes up, their beverage prices goes up, this is going to go up huge. So this, if you're looking for a retirement portfolio, it's just coming out of a base. It's coming out of a base for a 20-year base. Okay, so in 1999, this Coke was trading at $45. It hit $45 last year. Right now, it's not too far. It's only at $56. It's only a $10 increase. But moving now, I haven't seen the future. Maybe this goes to shit. Coke has a virus. Something happens. Who knows? Nobody knows. But this stock, based on historical performance, once it breaks out of this base right here, once it takes out this base and goes on an uptrend, nothing is going to stop this stock from going up. All right. It's just going to quietly go up. It's going to continue going up to 100, 200, maybe even $300 in the coming 7 to 8 years. It won't take too long. No virus. What I mean to say is, Coke tomorrow, if something is in their soda, or I mean, any negative news come out, right? I mean, only then these stocks take a hit. But you know what I mean.
I think Coke fits cannabis under drinks.
That I have no idea. But anyways, guys, also I'll back to what we were. So, guys, can I move on from dividend? Did this make sense?
Yep, we're good.
And the
You're
move.
good.
Yes, thank you.
The
Yes,
move.
sir.
You have a good job. The job that you do pays well. If I was you, regardless of my expenses, 500 bucks, I would throw into dividends every month, 500 bucks, no matter what. $500 are going into my dividend portfolio, no matter what, every month. Most of you guys, if you guys have a job which pays more than $8,000 a month, $10,000 a month, or 7,000, you can put in maybe $100 on the side a week into these stocks, into the dividend stocks. And trust me, after 5, 6 years, you'll be surprised. That money alone will more than at least double if you're going in good companies. Maybe you'll triple, maybe you'll go up even 5 times, right? Sometimes so some stocks go up 300-400%. And plus the dividend you keep collecting. All right. So keep that in mind. If you guys have jobs and you guys are stable jobs, $100 a week goes a long way after 5 years into dividend. All right. I mean, 100 bucks times 52 weeks. Let's just do the math here quickly, just so you guys can see. 5,200 bucks, you times it by 5 years, right? Times it by 5, $26,000. And let's say this gives you an increase of 100%, including dividend and whatever you're doing. Guys, that's $52,000 that you're going to save up after 5 years. Okay. That's 52,000 bucks. Okay. And then you leave this for another 5 years. Maybe this goes to 100K, even 200K in the long run. All right. So dividend, that's how the money is made. Is slow. You have to be very patient. You don't have to worry about the market crashes. You don't need to worry about the day-to-day action. This is something that you just build on the side, and it takes a long time. Okay. Okay. We'll move on to something else now. Somebody asked, how do I in the room? Let me just go on to my Discord. He asked a question. I hope he's online. That, do you think there are any safe plays that I should get in? I see strong ones, but will they keep running? Now, the thing with this person is, if you're listening to me, brother, if you're online here, now you send me a DM almost every day wanting to enter a trade. Trading is not done every day. You can look at the trades every day, but if you're looking to do trading every single day, then you need to trade the stock. You cannot do anything. You just have to predict the move. Once you get the move, you get the prediction, you need to be out. Now, Square was very strong today, right? A very strong stock. Like today, it is completely ripped, right? And this is a monthly channel, a monthly chart, which is showing us it's going to go much higher, right? But the only problem here is because it ran so much in one day today, right? Because it ran in one day, the premiums are very high on it. This IV is increased. First, the IV increased on 19 July. So when you guys look at options, you guys need to understand this. When the stock runs a lot in short term, first, the stock went from 220 to 267 just 1 week ago. It consolidated then in one day. So IV already kicked in, off premium was already increased. Okay. And then it came down a little bit, it probably settled, and then today it just jumped straight up. And there's a lot of premium increase. Tomorrow, if Square does not take away 280, even though the Square is trading at 272, tomorrow, even if it runs $5 and stays sideways all day, a lot of call options which are out of the money are going to lose premium. The stock will move up, but you will lose premium on your options. Okay, understand this one thing. Now this stock is running, it's right at resistance. They can easily fail this here and bring it right back tomorrow. Okay, so when the stock is running, you have to understand why you're playing it. Do you have any news? Do you know why it's running? Right? So it all depends. It's not something that you want to chase. Okay. And sometimes now this stock right here, if you were to this is a good one example right here. If we go in this base right here in May or June, if I was to play Square, and we did play, me and LB caught this move right here, right? So let's go in this base. So let's pretend like this action never happened right here. So ignore these candles right here, just ignore them for now. Ignore all these candles right here, just ignore them. So let's pretend like we're watching the price action right here. Now here, it bounced off support. In the middle, to play this is very hard. We don't know what's going to happen. If you catch this here, it goes up, fine, you will make money. But what you need to understand here is, you don't want to get stuck in this chop right here. If you get stuck in this chop, you're going to lose money likely on your puts and your calls, unless you're taking quick profits. Here, as soon as the stock went right here, it broke this level, right? You know how we go over levels are up, pre-market, post-market, we tell you guys certain numbers. Now, as soon as it broke out of this, what you want to see now is hold this level. You don't need to jump in on the first candle because it's just the first test. Second day, if you jumped here, then the second day, your option probably went to 0. Then the third day, it gave up. It wasn't able to hold. But then the third day came, it held the level. As soon as it was going to break the high here, you could trade this for, I need to remove the indicators. Sorry. Where's the delete button on this? Okay. So as soon as it broke out of here, you buy time on your options and look, a nice little move up. Then you also need to understand, as long as you're holding level, don't get scared on this candle, right? If you're in heavy, this candle would have scared you. Many people probably got out, but it gave a nice little move up. Okay, and now you trade the stock from here to here, wherever you want to take your profits, that's up to you. Okay, and then the same thing happened here. A nice base. It was having trouble holding these levels. Trouble, sellers, and it breaks on the first candle. Me, I don't like playing the first candle breakout. I will let it run without me if it has to. If it runs without me, it goes without me. As simple as that. I missed the trade. I like the chart breaking out, retest, and when it breaks out again, it's likely to be strong. A very good chart in the market right now is Snow. So let's go over Snow. What's happening here? This is a very good chart, a great risk to reward. Right here in this base. And then we have a base within a base. Right? One base right here in the base. Okay. Now what's happening here is this stock is trying to break out. They failed it here, brought a support, failed. Look how many times they failed it. Okay. Now, what we want to see is this is something I want to jump in. I'm just simply waiting for Snow to close above 270. If it closes above 270, like 271, like number doesn't have to be exact, right? I mean 271, 272. As soon as that happens, it's likely that this stock runs towards 295-ish or 300. It will give us at least $15 move to trade. Forget the 15. Even if you catch a $6 to $7 move up, you can literally make more than 50% on your options. If you catch this 272 to 280 run, okay, then they become confirmed trades, and that's what we mean when we say the level needs to be held. All right, something like this can happen. You see right here, the level being held, and then as soon as it breaks, you play, and it gives you a $10 move right here. Because we're trading it. Remember, we're not making the stock trade, we're trading it. You play this $10 trade. Okay, and then you buy some time on your options too, in case it doesn't work, at least the value is left in. Okay. Yes, Rakari, a lot of dividend stocks. So let me just read the chat. Go over bear spreads. Yes, cool guy, I'll go over bear spreads, no problem. So we'll just do mix and match trades. So cool guy Ricky wants to go over bear spreads. So let's see. Where's my give me 1 second, guys. Where's my numbers? No, okay, right here. So bear spreads. So let's go over what bear spreads are. All right, bear spreads basically, bear call spreads I'll go over. So it's a strategy where basically what you're doing is, if the stock is trading, so let's go over Snow. Let's do Snow, for example. So Snow, current price is at 268, for example. Okay. Now bear call spreads basically mean you want to sell calls and make money and collect premium. Okay. So basically on Snow, if I was to do a bear spread right now, so let's say if I believe the Snow is unable to break 268, okay? So I can actually do this here on TradingView. So let's say Square is unable to break 270 and you think it's gonna go sideways or come down, okay? So what do you wanna do here? So Snow is trading at 268. Me, I will choose a strike. The more time I choose, the more chances of me being right? Because I'm giving myself more time for the stock to go in my direction or not move at all. Okay, but then the returns will be a little slow because there's premium added. So let's say I go for August 13th expiry and I sell the 270 calls. Okay, I'm selling the 270 calls, but to protect myself, I am buying maybe 275 calls, for example. Okay, so 270 calls. You guys are okay with me writing on TradingView, or do you guys want Excel?
That's fine.
It's good.
Fine. Okay, now basically, so let's say 275 calls, you're selling. But then you're buying the 275, 270 calls, you're buying. For is protection against, in case Snow comes up with news or something happens and this has a short squeeze to 300 bucks. By doing a spread, your max risk is defined. Okay. So here, what will happen is, so if you're selling these calls, maybe these calls are going for, let's say, for example, $7, and then 275s will be going for roughly, in my opinion, 475-ish. Just an example. All right. So here I'm selling $700, so I'm receiving credit of $700 less. I'm also buying these calls for 475, so 475. So my net here, net credit will be 700 is my credit, 475 is my debit. So my credit will be 225 bucks. Okay. So 225 bucks is what I'm receiving in my account. Okay, so let's put this on the side, for example. 220. So 225 I received. Now let's say Snow tomorrow, it goes sideways, maybe it goes up, it goes sideways, maybe it takes a little dip and it stays here. Let's say after 3 days. So what happens after 3 days, guys, to this? What happens after 3 days is these both will lose premium, known as time decay. 270 calls right now, maybe going for how much? Maybe $6. And 275 calls, maybe going for they're probably going for let's say, for example, they also lost premium, they're going for 425. Just an example. Okay, so these lost 50 cents, this lost a $1. And so what's the value of this spread right now? 6 minus 4.25, which is equal to $1.75.
175.
Yeah, I bought the spread. So I sold this spread for 225 credit. I can easily, what I can do here to lock in my profits, I can buy these back as 6 and I can sell these at 425. So basically, in the first one, we received 225 bucks in our account. So 225 minus 175, which we're gonna pay back to buy it back. Our profit is $50. Now these numbers I just made up, okay? Profit loss, this could be 200 buck profit or less or more, it depends. All right, so without doing nothing, even though the stock went sideways, it didn't do nothing, but we collected premium from the market.
So
Makes
what's the
sense?
best case scenario for bear spreads?
Bear spreads, you do them, for example, when the stock is breaking out. Okay, when the stock breaks out here, for example, like it did a V-shaped recovery, went through resistance. Here is where you want to sell this area right here. The stock took a dip or goes sideways, and the longer you hold it, let's say you hold this throughout the entire thing, right? Let's say you hold this through the entire thing, you get to keep the entire 225 bucks. Like, because everything is gone to zero. This is the credit that you received. Make sense? I would not buy bear spreads here. Let's say, for example, Target. I did, one of the biggest trades that I lost, on bear spreads. I shorted Target right here. Where did I short? I shorted in. I have to look on Discord for the exact date, but from what I remember, it was right here at this level. Okay, my bear spreads went into profit. I think somebody entered with me. They were in profit. I did not cover because I thought this would be top for a while. It may consolidate or do something, and I would cover here. But what happened was it completely broke out. Okay, and it never came back. My strikes were 227 and 230, 250, I believe. Okay, it never came back. It just kept breaking out, and I just had to buy them back at the max, and I lost money on it. So for example, so if I was to go back to Snow, and let's say Snow broke out, everything happened. Now, by the day of expiry, right? So just an example, let's say this doesn't work out, Snow breaks out, you hold them by the expiry date, your 270 calls will be minimum $5. And then let's say Snow closes at 275, for example. These calls will be 0, right? The value of this spread is 5 minus 0, $5. And you collected credit of 225, but you gotta buy these back for 5, which is 500. So now you're losing 275 per spread, but at least your risk was defined here. You knew this before you entered. This is the max loss that can happen. Make sense? Yeah. So bear spreads, SPY I have been tracking for some time. I was gonna do them last week, then I didn't do them this week. On SPY, SPY options are very liquid, so you can do great bear spreads on it. Now, let's say for example, tomorrow if SPY consolidates here or gives us a bear signal, you can easily sell 2 weeks out, you can sell like the 442 calls and buy the 443 calls, right? But the risk reward will be in the market maker's favor. Why? Because it's likely that you're going to be right, so he's going to give you less returns. So maybe 442, I'm just making up numbers here, I have no idea what they're going for. 443, you might be able to collect around maybe 30 cents. And SPY, if it takes a dip and it goes consolidates here for 2-3 days, it stays below here, these same spreads will be worth maybe 0.15. So you can lock in 15 cents of premium that you can collect. The most money in options is made when people collect premium. Okay, people collect a lot of premium in the options world. All right, that's something I'm getting into now. And but for this, it's good to have cash in your account. So that's something that I'm starting to do more and more now, and it's a great way to make money. Okay. Trading flows. Another thing that we wanted to cover was bot commands. So in Discord, if you were to go in Discord, bot commands. Just give me 1 second, guys. All right. So if you guys have your Discord open, you guys can just go in Discord, or we can just follow along. And so the last bot that SJ, which he put in exclamation mark flow Nike. Okay, so now bot command has the codes. Maybe I'll make a list of all the codes and send it here. I think somebody was it you, Tanuj, or who was it for the for all the commands? Somebody did Sean G, right? Okay, so anyways, you guys can get all the commands and everything is there. So yeah, Yash just type it in. So I help, where you just type in, it gives you all the commands. So this is a very useful feature, right? I was also using this, but on a different site. But then, you know, now I look at how you guys are using this. All the information is here. This information costs a lot of money. We pay a lot of money for quant every month, by the way, right? So you guys can use it. And here, for example, the last one, let's just, for example, flow. We'll go with the ticker. I don't know, Walmart, I guess. Right. So we click on the thing. So Walmart, you can basically see how many calls and how much flow is bought from there, right? How much volume came in. It gives you all the flow right there. You have to look at the numbers, and it gives you how many contracts were bought at what price. All right. And then sometimes when you see that, you can look at the stock chart and see, does it make sense? Who's buying with this much money? If there are people that are putting $500,000, $1 million into such flow, there's a reason behind it. Those people have money. They're not just buying it. And so they're doing it for a reason. It's basically help. Are they right? No, they don't have to be right. They could absolutely be wrong. I mean, you guys saw in Amazon how much flow came in, millions and millions. They're all going to ship, right? So nobody knows what's going to happen in the market. Some people might throw in $1 million in puts or calls as a hedge against their $50 million equity position, maybe. Okay, so know these things. Okay, so can you just give me 1 second? I've got to reply to my dad quickly. Okay, so what else we have here now? Mohammed M2, you're asking if for ETF or dividend stock. It depends, whatever you want to put the money in, right? Just look at the historical performances. For example, if I was to buy SPY, right? SPY average index return is 10% per year, right? The only scary thing is it's going to go much this year. How long does it go? No idea, right? Or you can buy a dividend stock. It all depends. A dividend stock, usually I recommend buy the stocks whose products that you personally use, right? Just look at some, go to Walmart, maybe just see all those companies, Procter & Gamble, all the blue chip companies, McDonald's, all these big companies that are out there, they're very safe because you know, we depend on many of those companies. on our end, right? MasterCard is great. Banks are not bad. Banks sometimes don't move. You put a little bit, you scale, and you look at all the different sectors where you can put the money in, right? Genomics is coming up big in the coming years, right? Where a lot of money is to be made. So that's something that I really want to look into. Maybe we'll do a session on that in a week or two. I'll have LB. LB is very strong with genomics, right? Because where you can, so what I mean to say is if you put 5K into those portfolios in 10 years, you might be able to hit up out of those 10 stocks, even if one works out, that 5K can turn into 50, 70, 80K, basically, right? It's like in buying Apple, Amazon back in the 90s and stuff, basically. So block commands, guys, there are a lot of commands that you can use for flow and for Fibonacci retracements. There are many different ones that you can just go through. Maybe I can go through this live tomorrow, maybe while in the premium chat, so that it makes more sense. Well, ETF SPY is one of the best ones in the world, right? I mean, historically, and you can mix and match your money in a little bit in IWM, maybe Qs, right? There's XLK, XLI, S&P has a lot of sectors. Just type in, go on Google, just type, so there's XLI, right, which is industrial. Then we have XLF, which is financial. Then we have XLK, which is tech. So we have then we have XLE, energy sectors. So there are many of them, right? So you basically want to allocate to a few and where you think the growth might happen. Now, Saj, how do you hedge? Yeah, this was your question. How do you hedge properly? Okay, so let's go with this. So let's say I have a 20K cash account. So I got cash 20K. I have now, if I manage my account properly, okay, if I manage my account well, now cash is 20K, and I have maybe, let's say, position 1, position 2, position 3. Now my position 1 is maybe my total is trading for $700. My position 2 might be $500. Now this might be $2,000. The only thing wrong here is the size is not consistent. Okay, maybe we started with the same size and these are profit and losses, just for example, but I'm just using these different numbers so it makes more sense. Now if I have 700 in maybe a consumer or a retail, and then I got 500 maybe in energy, and then I got 2,000 in tech. Now my total value that I have in the market is $3,200. Okay, is $3,200. So $32,000. Now here, oh sorry guys, $3,200. Now here, what I want to see is first I want to see the weight of my position. In which do I have the most? Is tech making a top? Is energy making a top? Or retail making a top? Which sector is likely to make a top, or what's happening? If it's tech, then basically what I'll do is, just for protection, I will probably buy $200 worth of puts. Just an example, maybe 300 or 200 max. Okay, and now here what you want to know is my initial investment into these positions. Let's say you put in $500 into all of them. This example, right? So you were consistent with your size. You put in $500. Now here you're up $200 profit. Here you're up 0, and here you're up $1,500. Here's how I would hedge. Forget buying the puts. I will scale out of my this position right here. I will sell half right away to lock in my profits. Okay, but hedging does not mean buying puts alone. Hedging also means by locking in your profits, collecting cash in your account. Okay, me, I hedge very less. I rarely hedge my accounts because I just go in with consistency. Even if my option goes through, it's okay. Unless I'm heavy in something, I might buy a put, or I might do something that I think is worth it. Okay, so here, so hedging, you scale out, you lock in profits. That is also hedging. Okay, understand this. You don't have to buy a position, but if you think tech goes much higher and it's gonna rip, and now that you're up $1,500 on this position, you're in the money, the delta's high, and you think this can go to 4,000 tomorrow. Here's what you do. You maybe buy puts worth $300, okay, near the just not too far out of the money, something near the money. And tomorrow morning, this position right here, which we're focusing on, which is the biggest, if it rips, great. Who cares about this 300 is meant to go to zero. But if it rips, this 2000 is likely gonna go to maybe 3,000 bucks, right? Because it's up so much, your percentage will be higher. Or maybe it stays sideways, nothing happens, it's just at 2,000 bucks. But with this $300, at least you protected, you're willing to give 300 back in case there was a dip. And now let's say if this comes down to 1,000 bucks, okay, maybe this 300 has doubled to 600 bucks. So your value is still $1,600 on the position. Is this making sense? Right?
Is this like a scenario before earnings or something?
Oh no, just a scenario roll on any position, any given day. It's just me I'm just trying to explain to you basically what hedging is. You have to think hedging is not just, okay, I'm gonna hedge. Like there has to be a purpose, there has to be a reason why you're doing it. Okay, like there needs to be a reason. Here, my reasoning here was because I'm letting $1,500 go into profit and I think it's gonna go much higher tomorrow. What I'm gonna do is I will take $300 to protect this position right here because the biggest and is likely to run more. Sometimes when they run this can go to 5,000 also tomorrow. So I'll hedge it with $300. Like I'm willing to accept some downside. Now, let's say the downside happened. Now this $2,000 next day is only the position is only worth $1,000, but I hedged it with 300 and that is at $600 maybe. So my position is at 1,600. I take this position off the table. I lock in my profits. Okay. But if it worked out, now you do this with consistency. You do this 3 times. One of the times you're likely to hit this 2,000 will probably be $5,000 the next day. You guys have seen this in the options world many times, but this you have to be consistent. Make sense? Consistency is the key in options when you do them. If your sizes are different and you're left and right, you're looking to trade every day, you're trying to do all these different things, you will mess up. Trust me, the market will take away your game. Out of 20 winners, you can have 15 winners, but the other 5 losers will take away all the gains. Yes, BB, so net. So I hope these things you're finding useful. At the end of the day, it's all figuring out numbers. Okay, so that's where it is. And maybe this is 1,600 bucks, and maybe retail energy run tomorrow, and this is at 900, and this maybe goes to 300 bucks. Who knows? But at the end of the day, you want to look at the whole account, right? And here on my 20K cash, so my cash balance was left at 18,500. 1,500 were invested, and my positions were up nicely, right? I was $1,700 in profits, right? My account is at 21,700 bucks total, right? Is this a good increase in a week on a 20K account? Hell yeah, 1,700 bucks on 20,000 balance, right? So you want to look at the whole account as a whole something and just get rid of all 3 positions. Like who gives a shit what's going to happen? Just get rid of them. You're up $1,700 net. That leaves you to do other 3 extra plays at 500 bucks from the market's pocket. And you're picky with these trades. These you might hit 2 and 1 might go to loss, right? Maybe this comes down to $1,400. Maybe your balance after these 3 trades, maybe your balance comes to 21,200 bucks. You're picky with your trades. You did a great job. We give some back. It's okay. It's part of the market. Next day, we stay consistent with our positions, right? We're consistent. We're disciplined traders. Maybe these positions are now worth, with all our profits, maybe we're now closing the account at 22,300. This is how the account is managed. You have to look at the numbers. Now, some of you guys, I can bet you have a position in your account worth 500, then you probably have one worth $1,000 where you entered, and then you probably have one dumb position worth, I don't know, 200 bucks. Oh, I'm gonna do a lotto for 200 bucks. And then you probably have a position for 900. This right here, if you place trades like this is what's gonna screw you up in the long term. This right here, this $200 lotto, right? You have a 20K cash, for example, right? Oh, I'm feeling like a lotto. I think this is gonna run. I'm gonna do a $200 lotto. Why? For what? That's $200 is a fucking lot of money. You gotta work 10 hours out there to make 200 bucks, but you take it lightly because you just see this big number in your account. Forget the lotto, stay out of it, save this 200 bucks. But then this stock, 500, let's say you hit 100%. Okay, let's say you hit 100% trade, you're at 1,000 bucks. This goes to shit because the stupid trade that you made. This $1,000 maybe because you were inconsistent, maybe this dips 25%, and now your account says this goes to 750. And this $900 position maybe does nothing. You're at 700. I don't know. Like most options, let's say that you're on the losing side. But even though you hit 100% here, and your losses here were 33% or 25%, sorry. And your loss here was also somewhere near 20, 200 of 900. What is that? I'm just gonna make it up. I don't know. 22%. I have no idea. I have no idea. 22%. Okay. Even though your losses was smaller, but this for 550 bucks exceed your $500 profit here. This is not currency, by the way. This is percentages. Makes sense? Oh. So, but if your position size was consistent, right, you would be up net overall. But because you threw $1,000 here and 500 bucks in here, even though this 100% you won and you gave away 25% here, you give away whatever this percentage is here, your overall net loss. Okay. So this is why position consistency matters a lot. And I'm going to repeat, I tell you guys over and over. Position consistency, same sizes matter a lot. No, some of you guys take dumb lottos. Some of you guys would have $5,000 in Canada. You want to throw $100 in a lotto. Well, there's a great way of giving money back to the market makers. If you're going to do lottos, you got to be consistent with them. You got to let them run. If you're doing a lotto trade, right? You need, and you do 5 trades, you better make sure that one of them you're taking 500% profits. You better make sure out of those 5 trades, one hits 500%, maybe whatever span you're playing with these in. Maybe you're doing $5 in a month, maybe 10, maybe 5 in 2 months. But if you're consistent with them, you're lucky, you see something, one will be a 500%, there's no doubt. How many times do we hit 1,000% in the group? So many times, right? My recent lotto Amazon was at 2,000%. That I scaled out at. You guys remember that just a few weeks ago, right? Now I can lose maybe 5 lottos in a row, which I can lose 5 lottos in a row. That's fine. I will still be left with overall the way I scaled it. I'll still be up on my lotto position sizing. Okay. So trading is not a game that you just wake up at 9:30, start throwing numbers here, left and right. It's something that you need to study, work on. If you do it, you'll be rewarded. If you don't do it, you're just gambling in the market. Maybe your 20K will go to 100K, but the market will take the 100K back from you in the coming years. I can write this down for you guys. I was 17 years old or 18, I think, when I got into the stock market. I learned, I've seen a lot of things, trust me. I've put a lot of work into numbers. And this is any great trader, they will tell you if you're trading, you need to trade. Investing is different, trading is different. They're 2 different things. Understand this one thing. In trading, you better work with your numbers. In investing, you don't need to worry about the dips because you're investing for the long term. Okay. Sometimes a stock price goes down, but the company earnings, their profits are just rising. Okay. That's just the market conditions sometimes. Okay. What else? And some charts I will go over pre-market markets for you guys. Somebody mentioned check out TROW, TROW. Let's see what this is. Okay, so this is a daily TROW price group. Wow, what a strong, nice little uptrend. And how many charts in the market right now look like this? How many charts? There's so many charts in the markets that look like this. And what's happened? Boom. What chart looks like this right off the bat? There's one chart that looks like this right now. In pre-market, I'll go over it. But this is just in a nice channel, man. Very strong. This is just in a nice little channel. It's just going. I mean, there's nothing stopping it. There's nothing stopping it. So play that balance here above 200, play spreads, and then you, as soon as this breaks this level, 208, 220 is next on this stock again. Right? So you can just continue playing this channel until it breaks it. When it breaks it, you can buy puts. Oh. Okay, guys, I think this was a good session. Hope I was able to provide some value to you guys tonight. And some things that I did want to go over more, but I think I will do another session, hopefully. And let's keep this for 1 hour so people, you know, it's easier. I think we absorb more information. Thank you for attending. Tomorrow pre-market, I'll share some tickers that I had written down for today, but I think I'll keep them for tomorrow. And
thank you, Ricky.
Enjoy your dinner if you haven't had any. Right, wish you all the best. Keep hitting the market. Trust me, it's a beautiful thing. I'm 29 years old. I work for myself. LB is almost he's older than me.
Thank you, Ricky.
I mean, you guys see our lifestyle, right? I mean, So if you guys feel the same, man, I mean, but it takes a lot of hard work, obviously, you know, a lot of preparation. We work a lot, trust me. We put a lot of freaking hours into our work that we do, right? You guys have no idea. We have a lot of fun, but we put a lot of work. I haven't slept for 3 days almost. But anyways, guys, have a great night.
Ricky's
Well,
rich,
thank
not
you, guys.
LB. LB has no money, don't ask LB.
Thank you, Ricky.
Thank you, Ricky.
We'll see you
Thanks,
guys.
sir.
We'll see you guys
Thanks, Rick.
in our pre-market, boys. Take care.